So today they had 17.9 million shares traded. So when a person would come to this page and they might just go straight to the volume and look at that and they say, oh wow, almost 18 million shares were traded. That number really doesn't mean a lot. It just sounds like a lot of shares. So you got to put that in context. You got to figure out, well, how many, what percent is that of the company that was actually traded? And so that's what we're going to do when we go back to the slides. So when we look at our symbolic representation of all the shares in the company, you might be able to see down at the bottom left, I've got one of the little dots highlighted in red. Okay, now I should probably have about 1.5 to almost 2 dots highlighted. That's my mistake. But when you look at that, you can see that it's just one dot out of all those 531 dots inside of that circle. Those are the people that are determining the market price. So when you take a step back and you think about that one little tiny dot is the group of people that are actually determining the market price for the entire company, for all those other shareholders that are holding their shares of that business. Only that small group is actually determining that price. And what you got to keep in mind is those people aren't determining the value of the company. They're simply determining the short-term price of the company.
All right, that was Preston Pysh. This is episode 15 of Invest Info, and I'm going to speak about what moves stock market price. And Preston Pysh was pretty much explaining that as volume. And there's a difference between moving the price of a company and moving the volume. And I know when you buy into a position in the stock market and your stock begins to go down, you think everybody's selling the stock, you think you made a wrong decision, but you have to understand that there's high frequency trading machines that's running algorithms to manipulate the price, the short-term price that is, of the stock. If you did your homework and if you've been watching the lessons, you know that we don't get caught up in short-term price movement, right? We did our homework, we understand the value of the business. And really, when the stock price goes down, if you understand the business, if you know the value of the company, you actually want the price to go down. But as Warren Buffett always says, this is not a intellectual game, but a game of mental fortitude, roughly paraphrasing. And mentally, you see in your portfolio going down 10, 20%, it starts to take a toll on you mentally. But you have to understand that that's not moving the value of the business, but just a short-term price is the volume. If you're in a position and you see that the volume, they'll have an average volume and they'll have today's volume. You can see that on your Robinhood or whichever, if your brokerage allows you to, you can see the volume of the current trades that's being done. If a stock reaches a very high volume on one particular day, it's being pumped. It's being artificially manipulated up. It's not trading the value of the business. And the same thing could be done in the opposite direction. So when the stock price goes up and the stock price goes down in the short term, it doesn't mean that enormous amount of people are selling out their position. It's high frequency tradings and hedge funds and different market manipulators that do these things normally to stop loss retail traders out of a position. They can manipulate the price down to stop loss you out, because when institutions are buying into a position, they want to buy in cheap. So they'll fill up the position with shorts, driving the market price down, put a whole bunch of sell orders in. Warren Buffett even speaks about it. Selling the stock down is a strategy they do, so you could buy retail investor shares at a very cheap price. Because in order for you to buy, somebody has to sell. So they want you to sell your shares that they could buy it back cheap. So that was just a quick lesson on what really moves the stock price. It's all about the volume. The volume moves the short-term stock price, but it doesn't affect the value of the business. So if your stock price is going down, that doesn't necessarily mean you made a wrong decision. And it could go down for a while, and it could stay down there for a while. But understand that there's machines, market makers, hedge funds, day traders, retail investors, a lot of people manipulating the stock price in the short term. But we don't care about the short term. We care about understanding the value of the business and getting paid, all right, while the business recovers or while it grows. All right, signing out, and I'll see you on the next one.